Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Thursday, January 16th, 2013. Today we had a session that essentially tacked on from the previous day's gains, and definitely the focus was the NASDAQ side of the market. We were bifurcated with strength in favor of NASDAQ yesterday and also again today. So we're going to pay special attention to the NASDAQ levels as we go through the preview today. Internally, the market was okay. It wasn't great. We were less than 1,000 positive issues on both sides, so it was a positive day, but not a rip-roaring day to the upside. Let's go on and take a look at the major futures contracts and see what they have to tell us. All right, first up, let's take a look at the ES futures. We made a new closing high on the move, but didn't really top the intraday high of the previous high water mark here at candle 9 of the Seeker. So for the upside, what we have to look out for is resistance at that 1843 3/4 level. If we can power higher, then the next level that's going to come into play is the 8/8 level at 1875. To the downside, we did leave a gap, so that's got to be addressed, and also the 10 EMA after the gap fill coming about 1830, 1831. If we yield below that, then the low from Monday is going to come into play at about 1808. I think the real interest, though, is on the NASDAQ side of the market. NASDAQ side of the market did a little bit of an exhaustion gap today. Let me define that. It's an exhaustion gap because it's a gap up coming at range high, not really out of any particular consolidation. Was a little bit of a consolidation. We had 9 bars up, consolidated down here for a couple of days, but certainly this gap coming at range high could always be in jeopardy of being the exhaustion variety. We did make a new high on the move and also a new high close on the move, which is a little different than the ES side. So levels to watch on the upside, the next level is going to be 36.72, which is 7/8 on the Murray math box. That's, of course, if we can take out the previous day's high. To the downside, we've got to watch the gap window here. It's going to come in about 35.84. Then below that, we're going to be into the gap fill at about 35.73. All right, here's a look at the S&P TLT cross. We're starting to see momentum gather back in favor of the S&P. We're definitely not overbought as far as the risk on goes. This is definitely a risk on, risk off metric with the classic equities versus fixed income being evaluated here. Back up into the regression channel, but not in any ways here extreme. Here's a look at our 10-day trend. The 10-day trend is right around the 1.2 area. So right now it's definitely more. It's actually closer to the oversold rather than overbought area. So there's definitely plenty of room for the market to advance before we get to a 0.85 reading where we essentially empty out all the gas in the tank to the upside. So right now, according to the 10-day trend, the market's got plenty of potential to the upside before it gets exhausted by this measurement. Here's a look at the SOXDX cross. This is starting to gather some momentum in favor of the SOX over the NDX. Generally speaking, when the SOX is positive, it's very, very good for the NDX overall. And if we see some relative strength continue here in the overall SOX, that should be very, very good for the NASDAQ overall. Keep in mind that though we've got a ways to go before we get up to this key area in the ratio where we really break out and start to see some positive action to the upside. This is the breakdown in 2011. This is the where the bear market really took its toll on the semis. We did make this little sweep above this key level back in 2013 over the summer. So if we get back up into this area, that's going to be definitely a key area of interest for a lot of players in the market. Here's a comparison chart of the NDX versus the S&P. The S&P is in red. You can see the S&P is essentially retesting the previous high, closed essentially at the same area, while the NDX has pushed out to a new high and has certainly bettered the previous high close. It's usually bullish when you see a relative strength in the NDX over the S&P, and conversely, it's bearish when you see relative weakness develop in the NDX versus the S&P. So for now, this key measurement is still bullish and pointing towards higher prices in the market. Here's a look at our multi-sector daily chart. Saw some pretty good pretty good price action in the BKX and also the SOX. A little bit of a leveling off here, certainly in the biotechs, the BTK. That's the red line, and actually saw a little bit of positive action in the XAU. The XAU's got such a big spread here. I wouldn't rule out keeping some of these key XAU stocks, the precious metal miners, on the long watch list. Here's a look at the individual sectors ranked from best to worst. Top gun on the day was the computer hardware, the HWI, followed by the XAU. The broker-dealers were also strong. SOX put on another strong day, so definitely seeing something happening there. The transports were also relatively strong. The OSX was fairly low on the list. It would have been better to see the OSX a little bit higher on the list, more in sync with the transports. But can't argue about the decent performance of the day after having a pretty robust upside on Tuesday. All right, so let's work from the top guns to the bottom of the list. Here's the hardware index, the HWI, pushed out to a new high. We're only 5 bars up here in the exhaustion run of the secret count, so we definitely could have some more room to the upside. If we do span to the upside, keep an eye on this 8 ace level at 562.5. That'll be the next important level coming up. Here's a look at the XAU. Essentially matched the last closing high here. Still got some pretty good construction here. We're above the 50 and above the 10 period moving average. We're 4 bars up in this current exhaustion setup phase for the seekers. So definitely could see the static trend line come into play before we find resistance. The other key feature on this chart is that we are now above the 0 line in the MACD, so we could see some upside momentum develop in this key chart. Moving on to the transports, we did squeak out a new high, though it wasn't terribly decisive. We did break out of this 3-day range, and now we're into this key area of the 8 ace level on the Murray Math box. That's 7,500. Above that, next level is 76.56, which is going to be plus 1 ace, which is going to put us into the overbought territory. Just note that we are getting fairly deep into this this uninterrupted run. We had this one little consolidation here, but we're starting to get pretty extended here. So this 8 ace level might have a little bit of influence here before we make a move either way from here. BTK was fairly positive on the day, just barely eked out a new high. We are in the overbought territory. We're seven days up now in the setup phase of the seeker. So key resistance is going to be up above today's high. It's going to be 25.78. Support's going to be 2500, which is 8 ace, and almost used today from that Murray Math level on the GAN box. The oil services, the OSX, is still struggling here. Not looking too healthy here. It's still pinched below the 50 DMA, which is really a defined trend. So definitely keep an eye on the 50 DMA and see how price interacts with that. Key support to the downside is going to be the static trend line coming in here about 271.5. Last laggard on the day was the XOI. This is starting to look a little bit sloppy. We've got a double top in place here at the 8 ace level. We did a setup seeker startup phase here that terminated at the 8 ace level, and then we did a subsequent one here that also terminated at the 8 ace level. We're now just gaming the 50 DMA, and if we lose that, we're going to very quickly put this 4 ace level and the static trend line into play to the downside. So if you're looking for somewhere to kind of mine for shorts, I would definitely keep this sector at the top of the list. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.